Welcome back, everyone, to the Biz Beat by SVA, where we focus on what business owners need to know about taxes, policy, and planning. I know you all have missed us. It's been a little while. We took a little bit of a break through busy season. Now that April 15th is behind us, it's time for Biz Beat Season 2. So excited to get started here. I am Lee Schwartz, Director of Business Development and Sales here at SVA Certified Public Accountants, and joined as always by Eric Trost, not just our tax principal, but also our firm's president. Eric, how you feeling about Season 2?
Really good. I mean, we've renegotiated my contract with the publication company. I had to hold out for a while. That's part of the delay, but we got terms set. I'm getting double what I was getting last year for doing this.
Yeah, and I'm getting half. So I don't know how this. We should have negotiated together. I guess I'm a bad negotiator.
Yeah, I went second in the negotiation, and cuts had to be made.
Fair enough. Well, it's really good to be back. Looking forward to taking on a lot of. Look, I'm sure be talking about a lot of the same things we talked about last year. But there's going to be a lot of updates. Hey, the first one we've talked about probably on half of the episodes so far, and that is tariffs. Okay, the tariff website is live. Eric, talk to us about what our listeners need to know about the tariff website, and then we can chat a little bit more about kind of where to go from here.
Yeah. So, quick recap. I think just getting to where we are right now, there was a Supreme Court ruling that said the Trump tariffs, I call them the Trump tariffs, but it's really, Trump's use of a certain law to say that he could single-handedly enforce tariffs or levy tariffs without congressional approval. Supreme Court overruled that and said, no, you can't do that. And you have to, then another court said, so not only, was that not right, but now you have to do refunds. And so there is a refund website that was being set up that is now functional, and it's at cbp.gov. So let me say that again, cbp.gov.
And we will put that in the show notes too. So hopefully we want to make sure you're at the right website, because certainly there will be fake ones set up, which we don't want you to go to.
Yeah, that's right. Every once in a while, when the government has a program that's put out there and gets some news with it, there are website scammers that will set up a service to do it on your behalf. And then essentially you walk through the same steps that you have to walk through on the real government website, except now you do it on their website and they charge you a fee. So there is no fee you have to pay to apply for this refund if you're at the right website. You just apply for your refund. And again, who applies for the refund? It's the importer of record that paid the tariff. And then where it goes from there, we've already been discussing with some of our clients about what happens when you get the refund, because some of their customers that feel that the tariff was passed on to them are already calling our clients and saying, hey, you passed the tariff on to us and we expect to get that back, or something of that nature. So I think there's still going to be a process to go through on what do you do when you get the money back? Is that really a windfall to who, and who gets it? And how do you, divvy this up and pass it on? And ultimately to the consumers who maybe have paid some of these tariffs, I don't know that anything's getting back to them.
Well, I'm certain it will be battled in the courts for a long time. But the bottom line is, if you were that importer of record, you've got something to do right now. There are next steps for you.
Yeah, that's right. So you're going out to the website, you're filling in. There's a verification process, and then right now, what the CBP is saying is it's going to take 60 to 90 days after verification to get your refund.
Okay. And then Eric, I know you were talking to your clients who did directly pay those tariffs. What are the conversations you're having with those clients who were maybe, downstream a little bit, one or two, levels downstream from the tariffs?
Yeah. So right now, the conversations I've had, so my experience is just with clients that have paid the tariffs, and the conversations they're having with their downstream clients that they sold the goods to ultimately. So our clients would have paid the tariff and then perhaps passed through some of the tariff costs, whether it was some of it or all of it, to the downstream. and then how to calculate that and make a proposal for what's being paid back. And by the way, if you're a company that paid the tariff and told a company you were passing it on, you might be getting a call that says, hey, when you get that tariff refund, which I assume you're going to apply for, make sure to send that to us. Our clients have had those calls already.
Mm.
So the downstream customers have called our clients and said, hey, we want to get our tariff money back that you passed on to us.
Right. And as you said, those clients are probably also making those calls. So
Yes.
those calls are happening all over. It will be interesting to see how it all shakes out. But at least if you are not downstream, if you're at the headwaters, I guess,
Right.
I don't know, to stay with the analogy, then you've got a next step and a place to go. Again, the link for the Tariff website will be in the show notes if you want to use that directly.
Right.
Okay, Eric, another thing that we talked about quite a bit in season 1 was the Trump accounts. I think there's a little bit more clarity even since our last episode on what to do if you have a newborn or a young child, like how to qualify or how to make sure that now I believe starting this year, your child is getting money from those Trump accounts. Can you talk about that a little bit?
Yeah, so we've talked a lot about the Trump accounts, but we'll talk about this specific facet of the Trump accounts. Newborns that are born in the United States as a U.S. citizen get a Social Security number, born between 2025, so last year, and 2028, qualify automatically for $1,000 government funding into the Trump account. And so the question is, well, how does that happen? Does the government just know there's been a newborn and a Social Security number set up, and does the government set up the account and put the $1,000 in? It's not automatic. You actually have to file a tax form. That's the 4547 form, which is the Trump account form. You have to actually send that form in to the IRS. Now, you could have done that with your 2025 tax return, which you maybe filed by, is mailed in by April 15th of 2026. Maybe you're on extension and you can put that form in your tax return. But you don't need to send it in with your tax return. It's actually a form that can be sent in as a standalone. So you can fill out the form 4547 on its own and then make this election to get the $1,000 deposit from the government to fund the Trump account. There's really no reason why you wouldn't do that. There's no catch to this. So if you have a child that's a U.S. citizen, gets a Social Security number, born between 25 and 28, you want to be filing this form to make sure you get that $1,000 deposit that's from the government to start the Trump account. And then recall the Trump accounts in general, that grows, I'll say tax-free, but it's really tax-deferred. It grows until they take the money out. And what do they take the money out for? It'll be the IRA rules that take over these accounts when the child turns 18. And those IRA rules are, you can take it out when you turn 59 and a half, or you can take it out for special purposes like first-time home buying and college education. At that time, you pay tax, though, on it when it comes out. So you pay tax on the earnings when they come out, and you don't pay any penalty. If you take it out for other reasons prior to reaching retirement, you can end up paying a penalty on it. So it's a matter of looking at what the IRA rules are to get the money out. But for now, the purpose of this part of the segment is just get that form filed if you have a child born, because you want to get that $1,000 funding into your Trump account.
Okay. And if that does come out, or I guess when that does come out, that's coming out as ordinary income, correct? Not as you're not paying capital gains.
As ordinary income and not as capital gains. So what happens is you build up a tax basis in your Trump account. And then when funds come out, some will be taxable to the extent it's earnings that you didn't contribute, and some will be tax-free to the extent it was your after-tax contributions that went into the Trump account.
Okay, great. So a little bit more clarity there. I feel like we're getting more clarity on these things, the tariffs, the Trump accounts. So at some point, we'll it'll be fully developed, and we won't have to talk about it anymore.
That's right.
You getting sick of it yet, Eric?
No, we'll move on to other things. There'll always be complexity that we have to sort through.
That is for sure. All right, so let's we have built up a little base of questions that have come in for the inbox. One of the ones I know we wanted to talk about today, the question that came through, Eric, was, is a cash balance plan right for me? We didn't get any specifics with that question, so maybe if you want to talk a little bit about who a cash balance plan is right for, at least from a super high level, that might be helpful.
Yeah. So this is a bigger question. It goes into a cash balance plan as a retirement plan that you can set up for your business. So kind of bigger question is what kind of retirement plan should you have in place for your business? So is generally a business owner question, and setting up a retirement plan that can be the most tax efficient for you. What kind of plan are you looking for to say put away tax deductible dollars now that can be sheltered with earnings until you take them out at some later time? A cash balance plan is a type of plan that can really front load quite a bit of dollars in beyond the traditional limitations that you hear about in 401k plans. So it can go well beyond those kinds of dollars, especially for those that are, say, over age 45 and have a somewhat limited employee base. And that's where cash balance plans become potentially a planning tool. But I think what we should do overall is go over what kind of retirement plans are available for small businesses. So maybe we want to do this on a next episode and talk about where cash balance plans fit in, but then talk about the other ones that can be set up from the, easy, simple plans and safe harbor 401ks to the more complex things like cash balance plans and where they might fit. It's probably a good review for those that have heard about some of these plans and want to make sure they're in the right kind of plan to hear about it again and just see an overview.
Yeah, I think you're right, Eric. We should definitely get into that in more depth. And I know as we talk to clients, like, this can often be one of those things. People set it up and they kind of forget about it. And there are a lot of clients who, or at least companies that we interact with, that probably maybe they set up a plan and it was right for them at the time, but that business has changed and it might not be the best fit for them anymore, or
Right.
there might be better options. All right, well, let's jot that down so we make sure we cover that in a future episode. I just want to mention too, you can send your questions to bizbeat@sva.com or submit them on our website at sva.com/bizbeat, and we can address your question in a future episode. Okay, well, I think that is good for episode 1 of season 2. Eric, we got a lot of things. I mean, we got lots of questions to go over. We've got future topics now. You feeling good about the kickoff of season 2?
I am. I think there's going to be it's going to be exciting.
Well, good. I agree. I mean, today we covered the refund website. We talked a little bit about the updates on the Trump accounts, and now at least a high level overview of cash balance plans. So lots of things that we've already talked about. Lots more to come. Continue to listen. Please subscribe on Apple Podcasts, on Spotify, or on YouTube, and share it with another business owner that you think might find it helpful. And as always, this advice is not deemed or not intended to be specific for your business. So if you have specific questions, please reach out to us. We can certainly address them individually. But what I would say too is right now is when a lot of business owners are feeling that frustration of, my CPA got back to me on April 14th and I owed a bunch of money, or boy, we didn't really have a strategy in place last year. It's time for us to talk. It's time for you to become a client. So let's talk. Reach out to me, Eric, anybody here at SVA, and we can talk about how to make sure we help you and have a better strategy moving forward. So that's my little pitch for SVA, but thanks for listening, everybody. Hope you have a great week, and we will see you next week on the Biz Beat by SVA.
It's the Biz Beat by SVA, breaking down the news of the day, from tax tips to business trends, smart insights from trusted friends. The Biz Beat by SVA.